So I'm going to do it in a little bit reverse order here. Just this chart on the screen here. Obviously, the Dow Jones Industrial Average in AIQ's market mode. Those of you who are familiar, and I think most of you are, with our market chart, which combines the Dow 30 price action together with breadth indication indicators like advanced decliners and high-low, and an expert system that analyzes relationships between the breadth of the marketplace and also its relationship to the Dow itself. What you probably noticed is that the chart is colored in three different colors on the screen here. We have the regular price bars in red, and in blue and white, we have a color study that I've applied to the chart and I was going to talk a little bit about today. So what this is the color study is based upon the expert rating of 95 or greater on the market itself. And 95 or greater are the expert ratings to the upside or to the downside that we consider to be significant and may indicate a change in the market direction. The system that's been in there for over 30 years was only tweaked once, maybe 20 plus years ago. So it's pretty much, it doesn't change as years and years go by. We don't try and fit this expert system at all. So it is what it is. You do get some decent indications of market turns. I think you can see right here, by having the study on here, you get a really good snapshot of what works pretty well in here, especially when you have these clusters of buy signals that are in the blue. So this is not any signal that's 95 or greater. I've colored the bar blue, and that's to the upside. So any of these blue are the upside indications. Now the white ones, the white bars are expert ratings 95 or greater to the downside. You can probably notice we do get quite a lot of upside ratings, and the cluster of upside ratings are pretty good in general when you get these happening like this, when you've got a pullback in the price action. You do get false signals and whipsaws like here. There's a buy and followed immediately by a sell. Doesn't always work, obviously. The sell signals at the top here are pretty good, up here and up here. And again, over here as well, and up here. So there is some good information, and it's a great visual check to have color studies done like this. So for applying a color study, whether it's based upon, in this case, the expert rating, or if you want to place a color study based upon a strategy, you need to use our Expert Design Studio tool to begin that initiation process. So as I said, we're going to work our way backwards into the indicator studies, because this is kind of the end goal of getting together a strategy, especially when it's on indicators or if it's based upon price action, and then having that study applied to price charts itself. By the way, this is a generic expert rating study. So any chart that I bring up, whether it's in this case the Dow Jones Industrial Average, or if it's a stock or anything that has an expert rating, including groups and sectors, then your chart will be colored blue for up signals and white for down signals. I'm sure the question will be, where can I get this study? Actually, I'll show you real quickly how to do this, and it's something you can create yourself very, very quickly using something that's already canned in the system. So let's look at the mechanics of how to put this on here, then we'll work our way back to the study that's already in your system that makes this possible, and then we'll move into the indicators from there. So in this case, when I click on chart up on the menu here, we go down to settings, you have a choice down here for color studies. So this is where we go to apply any color studies to our charting area. First thing to note in here, and this is an important thing, color studies looks at one file and one file only. So that file is an Expert Design Studio file, which is one you can create in Expert Design Studio or one you might open in Expert Design Studio. However, if you have 3 or 4 different indicators that you want to apply to a chart, you need to make sure they're all in one file. In the past, when I've done a class on this, I've always suggested that you just create a new EDS file, and we'll show that later, and then you call it My Color Studies, and then you can copy in any of the coding from other files into that one file, and then you'll be able to apply all of those studies to a price chart. I don't suggest you put on too many price studies onto a price chart. It gets confusing, and you'll end up with too much information, and you won't be able to see, one study on top of another will happen. Priority comes to the first study that's in the EDS file. So those are things you'd have to bear in mind while doing the color study. So what you're seeing here is the ability to get the color study is from an EDS file, as I was saying. Notice the pathway here, which is WinTest32 where our program exists. EDS strategies exists as a subfolder within there. And within there, this is the file name that I created just for this particular session. I called it color ER on the market.es, but it does mean it can apply anywhere. That helps me identify this if I change things down the road and I want to put this back on charting. So it's easy enough to, once you created that file, you just literally open it and you'll be able to find it wherever you've actually created it. And usually it's going to be straight off of EDS strategies. Or if it's one that you've created based upon a strategy already in the system, you might have modified one of the strategies that's within here. And if you open up that strategy, it will appear in the color studies here. Once it's in the color studies here, your next job will be to create the new color study. And we'll do the mechanics of this real quick. And I'll delete these out of here just so we can illustrate it. This is what it looks like when you come in here, and there is no file in here. Once you've located that file that you want to use for the color study, your first job will be to create a new color study. Now, there's two areas you can select the color study to be on. Sometimes if there's something based upon volume, you might want to place it on the volume, or maybe you want to place it on a technical indicator. That's a possibility. In most cases, I like to see it on the price chart, and so that's the choice I have here. If I want, as I said, I could place it on an indicator. So whenever I have that indicator under the price chart, it will change its color to the appropriate color for this particular study. So in this case, we're price plotting it. When we go next again, do I want to do the open or the close or the price bar? I'm never going to do the open or the close because it's too difficult to see the color on that. And I'm always going to go with the price bar itself. So I'm going to click next on that. Now, the next thing here is choose a rule. So these rules are either one of two things. They're rules that we created and you already have in the system and that you can then select because they'll be in this EDS file that you pull up. If you are pulling up the file I created, which is this one here on the market, I have two rules in here that I created, ER down or ER up, pretty straightforward. In the first case, I'm going to select ER up and go to next. So that's the rule to color the bars when an expert rating of 95 or greater to the upside occurs. So in this case, I can select a different color if I want. Obviously, a different color to what I have on the price bars regularly. In this case, I have red, so I'm not going to select red. I can go with yellow. When I click next again, this just tells me what I've done, and you click finish, and that one's ready to go. Duplicate it for the downside. They're separate studies. Price plot again. In this case, still the price bar. This time ER down. Change the color. And instead of doing the white, we could do, say, let's go with gray. And click OK. Some of it's contrast with your background, and it's different, obviously, from the price bar of the regular price chart. When I click next, there's the summary of what I'm doing, and I click finish, and I can then go ahead and click OK. And you see immediately there's a change on the chart here because I've selected yellows for the up on the expert ratings, and I've selected this gray color for the down. Not as good a contrast as the colors as I had. And it's a real simple process just to go back in there and edit that if I want to do that. So, and I will edit this one, still on the price plot, and ER up, and I want to change it back to its blue because that was a good contrast. Say, let's go with this dark blue. Click OK, next, finish, and then on the ER down, we'll go back to different color on that one too. And change color on this one. And in this case, we had it as yellow instead. So we'll go with that. So that's pretty much how you go ahead and not only apply a color study, but also configure it to where you want to see it in a price chart. So as I said, we're working our way back just a little differently. It seemed like a good idea to do an illustration first, so that those who have never used a color study, you have the capability of adding any strategy that's in the system in there. And, you know, by a strategy, I mean one of those EDS files that has a rule. It has to be a rule. We can't do it just based upon a value. It has to be a rule itself. So in the case of Expert Design Studio, that rule that we are using here, or this EDS study, has rules within it. So when I'm in the color study here, this particular color study, I can open that up in my Expert Design Studio and show it to you right now. Fortunately, I do have that already here. No, that's the wrong one. That one's for later. And let's see, it is ER Rules Market. There it is. You may have noticed I have several copies of Expert Design Studio open. You can do that if you launch Expert Design Studio, by the way, from your program group. So under here, under your start, go to Trading Expert Pro and go down and click on Expert Design Studio. If I do that now, I'll get a fourth copy. I've got 3 copies already open. There's no harm to your system in order to do this. If you launch from the main menu, and the main menu itself I have here, it usually goes to the last copy they already have open. So you can have multiple copies open if you're working like I do. I like to work in several copies at the same time. So let's see where we are here. First off, Expert Design Studios, those who have not used this module within Trading Expert Pro, it's in all versions going back to at least 3.0 of Trading Expert Pro. I don't think anybody's still on 3.0, but I know those of you on the real-time system are on 9.51, and those of you who haven't moved up over the years are on probably 9.4 or 9.3 or lower. I do suggest you get up to 9.6. This is our latest version. It has a very robust key system that doesn't even require you to call us to get keys anymore. So talk to sales about that, or drop an email to sales at AIQ Systems if you don't have that already. So Trading Expert Pro 9.6 Expert Design Studio. We click on here. When this opens first time, it's completely blank because there's nothing open. What I did for creating this particular rule to get that color study on the charts for the market, and as I said, it also applies to color studies on any ticker that has expert ratings on it. It doesn't really care. What I did was I took an existing expert rating rule called ER down and had ER up. And let me show you where these are. And I just modified it. By the way, you'll notice in here, I've created some what I call definitions. And these are things that I might be using in the future if I'm going to create a multiple leg strategy to see which expert ratings work well, backtesting. So not for today, but that's something I'm working on. So let's go into File and Open. This is how we get to an Expert Design Studio strategy. I will actually open a blank copy, or I'll open another copy so that we can illustrate this. Trading Expert Pro, Expert Design Studio. So notice another copy open up there. This happens to be a strategy we used in a prior session. I'm going to go to File and Open. And within here, of course, I can go, if it doesn't automatically go to your Wintest 3.2 EDS strategies area, you just need to go and look in C:\Wintest 3.2 EDS strategies to get there. Sometimes that Explore setting is not always active within some Windows versions, depending on the configuration. Once you're in EDS strategies, within here, all these subfolders that are available come with the system. All these are, if you've not been in here before, or if it's been a while since you've been in here, some of these strategies have been around 15, 20 years. It covers a huge range of technical indicators and also strategies from gurus and technicians, CMTs who we've worked with in the past and graciously have given us permission to use their strategies within the system itself. So, for example, in this case, the expert rating is a very specific type of indicator or type of strategy. So you've got technical indicator strategies here that are based upon AIQ barometer, also on multiple indicators or one indicator. And you can see all the different indicators in there, and we'll be looking at that shortly. You can go back up here, and I also have the ability, as I say, to go and look for the expert rating based strategies, which are also in here. Expert system based strategies, expert rating strategies. And see, here's a ER down 95 or greater, ER up 95 or greater. All I did was I literally took the code from this is ER up 95 or greater, and I then copied the code from this. Literally, I did this. This is what I did. I copied this, edit, copy. I did file and then a new, file and then open. And I went for expert rating 95 down or greater. And then I just pasted in the code for the other one. So I've got ER up, and it doesn't particularly matter. You don't need to know about how to read the code. This is a fairly simple rule. Look at these examples from like, oh my goodness, it's 20 years plus back. ER up and ER down, they're both in there. So I have two rules, because if there's an if in there, it's a rule. I can then file and save as whatever I want to call it, and wherever I want to save it, usually in expert EDS strategies, and I'll call it, we'll call it the Zoom ER. Once that's saved, those rules are now available for me in the charting area. So let me switch back to the chart for you real quick here. And as you can see, I've left this color studies open that we opened from chart settings and color studies. If I browse into here right now, and I go to, remember we were in EDS strategies, and I just saved a file in there, and that file will be available for me to use. And there it is right down there. There's someone still has their audio on. If you could zoom, if you could mute your audio, or I'll mute you, or just give me a second here. There we go. Muted everybody again. Thank you. So you can see there's that Zoom ER that we just created. And so it wipes out. Remember I said there's only one file you can have at a time in color. So it's a very good reason. Otherwise it would get really confusing. And when I create new color study on the price plot, like we did earlier, on the price bar, and look what's in here, ER up and ER down. It's going to take the information from that EDS file, and there it is, ER up of 95 or better, ER down of 95 or better. Simple rule, very straightforward. That'll color every single chart with the expert rating. I particularly like it because the market rating is something I keep track of quite a bit. And we get a lot of information about that on the market change in direction, and also in our market summary in the reports area. So I'm going to cancel that, but that's how we do it. That's simply how we do that color study. And those color studies can be as complex or as simple as this one. If there's multiple indicators or multiple strategies that you want to use, as long as you combine them all into one file like this, like we just created this file, then we can put that onto a price chart and we can see that color study in our system. So it's a very useful way of doing things. As I said, if I had another rule I wanted to also apply to the chart in here, I would add it into this particular strategy, because I can only have one file apply at a time to a chart, but I can have multiple color studies on there. I've seen people with up to 4 or 5 different color studies within this listing area, within the charts themselves. So here's the color studies again. As you can see here, I've seen up to 4 or 5 rules in here at any given time. So let's go and move back over to the Expert Design Studio again. What I want to do next is move into the section where we'll talk about expert indicators and not expert indicator, I mean custom indicators, built-in indicators, and testing them in the Expert Design Studio. So here's the ER up-down rule that we were just looking at. I'm going to close that down, and we're going to close down my original color, the market ERs up and down. I'm going to move to a different rule here. This one, let's move to the next one here. This is the Bollinger Band one. This is what I pulled out from our existing strategy. So here's the rule itself. I'll show you where this is. We're looking at a Bollinger Band. So Bollinger Bands, as you probably know, on charts themselves. Here's the Bollinger Bands on the market. And I can do this on stocks. Let's bring up a stock for this illustration. And let's go with BA. So in your charting area, of course, you have the upper and the lower Bollinger Bands right here. A classic use of Bollinger Bands is 2 areas, really. One you can look at is squeezing of the bands. When the band squeezes together, often there's a change in direction. There's also cutting through a Bollinger Band and then cutting back down. So it's been above the Bollinger Band and then comes below, or it's been below and it comes above. So in this case, this is a good illustration here. Like this period here, you can see on the chart, it cuts below. When it cuts back through, prices start to move up somewhat. Same again here. At the top here, you also have it happen here, but then of course it goes back up again, almost comes back. Yeah, it does go for the top there, comes back down again. So you can see there are instances where the Bollinger Band provides us with an overbought and oversold situation. And when it comes back inside again, that's usually the signal. Like all indicators, you get periods like here where you can go and get whipsawed a little bit. And in situations where there's strong trends down, it can pop out and back in again, and then it fails. So this is a failure yet again right here. But it's a well-known and well-used technical technique using John's bands, John Bollinger. So let's go back and have a look at what this is and where this is. Price crosses from below to above the lower Bollinger Band. So this is what we're looking for. We're looking for this. We're looking for this. We're looking for below and then crosses back up. Not only we're looking for that, we're going to see how effective that is for trading stocks. A very simple place to start from with one component of one indicator. The code again is not that important, but just so you know, when you see something that's straightforward as prices cross from below to above the Bollinger Band, and you can read it here. You name the rule, we name the rule, you name the rule if you're writing your own rules. So lower BB cross up makes sense if the value of the closing price 1 day ago is less than the value of the lower Bollinger Band 1 day ago. That's literally the coding in there. And the lower Bollinger Band, when there's no number indicated here, that means today, is less than the close. So what that tells me simply is that the value of the close yesterday needs to be below the Bollinger Band, and today the close needs to be above the Bollinger Band. Simple, straightforward. So what do we do next with this type of rule to test it? First off, when you're testing rules, I find it much better to start with a small database because A, the tests run quicker, and B, I can get a good snapshot of how it works on a smaller database before we try to move to a bigger one. So first thing I do is go up to File and go down to Properties. And in here, we select what tickers we want to do it on. So as you can see, I have a large number of lists available for me in here, and I'm sure many of you do too. If you try to do it on all tickers, you're doing it on tickers that may be somewhat lower price, some less liquid. You may have British and other nationality tickers in there. I use list controls to control my environment for testing, and I stick to the Dow 30 to get myself going in here. It's a daily time interval. By the way, you could use weekly. Weekly is a much, much longer picture, and for very longer term traders. And the type, of course, it's a stock. So I'm just looking at stocks. I could apply it to indexes and other things as well if I had those in the system and I wanted to test it. But for most cases, you're going to be doing it on stocks if you're trading stocks. So when you come in here, there's usually a tab right here. It says lower, BB cross up, and that's the name of the rule. We're waiting for that to fire. If there is no tab in there, you need to do a report and insert. When you do the insert here, there's no rules to create the report with because there's only one rule and we've already created it. So then once this tab is created, this is kind of where the results will appear for running this rule on any given day, or if it's run automatically after you do your update each night, which is something you can do in the AIQ data retrieval. In this case, I'm just going to run it real quick. I've got a date in here of, I believe that's in the future. Let's try a 10. Actually, let's go with 2. So I can change the date in here, and then this is run all. And it's just run that for July the 1st. And it's found one ticker out of the Dow 30 that has a crossover to the upside. So just to show, make sure this is the rule that's working, first thing you need to do is make sure this is not some mistake or some error, or we've changed the rule and messed it up, is go and see if this is true. So when you chart one of these in here, and there could be more than this in here, if more crossed the Bollinger Band, when I click on chart ticker, actually it's on my other screen, I'll do it manually. Here we are. And yes, so the ticker was WBA. So if I chart WBA, and on 7-1, there was a crossover to the upside there. Not a great one, I would say. It's crossed below, and then on 7-1, it crossed back over. Although if you hung on, you'd probably be just about break even by now. So that shows us exactly what it is we're looking for. It's just one example. So let's go back and expand what we're doing here so that we can give some parameters to test this. So once we've got this tab in here, once there is a report tab in here, which is where you'll see each day's running of this, if you do it as automatically or manually like I did, once you have that in there, you have the ability to create a back test. In this case, I've already created a new back test. Once you do that, it moves to the back test mode, and you can then toggle between the two here. So this is the test view, and this is back in the rule view and the running each day view. So what I did was I created this and I did a test. So right now, this was a test I'd already run earlier. What I'm going to do is just show you and run you through the process that happened here. So testing is a process of setting some parameters in order for us to try and just get an insight if this strategy is going to work for us. And we can change so many variables when we're testing. We do have to be careful what we're doing. When you go into the test mode, the first thing that happens is you end up in the edit mode. So 2 things to bear in mind. We're about to test this simple strategy crossing from below to above the lower Bollinger Band. What things I test on right now is dictated by the properties that I said earlier. So everything is associated with what we did earlier, the rule that we created earlier, and the properties as far as what stocks we're testing. So it's set to test just the Dow 30 for us to make life easy. The first tab that comes up in here is what do we enter on? In this case, there's only one rule in here, and that's the rule that's related to that tab we created. Remember here? Can't go back there for a moment, but when we put that tab in. If you have multiple rules within a system, crosses this and then does this, and then you have them separate, you can have separate tabs for each of them. In this case, we just have the one rule. I'm only interested in the outcome, right? The ultimate outcome to test it. So that's what's available to us when I'm in the test and the edit mode. And so that's the rule that's going to be in there. And so the entry is on that rule, crossing from below to above the lower Bollinger Band. And of course, what am I going to be doing? I'm buying long. I'm not going to go short. Obviously, it's not designed for that. It's designed to buy long. The next area is how far back do we test? Testing back 24 months is a good place to start from. Makes it fairly quick. These days it's very fast unless you have a very, very complex rule with lots of reiterations in there. In this case, it's very, very quick to do it on 24 months back. So it's a good range to start from. I sometimes go back 5 years to get a good, get a different market conditions. If you're testing throughout a bull market period, you're attempting to get a system that's going to beat the market that's already doing pretty well in a very strong bull market. So it's good to test over periods where there's bull and bearish positions. So right now, it's not a bad time to be trying this. Pricing entry. Remember, this system is going to look for every stock for every day for 2 years. It says, oh, it's a buy. It's going to get in at the open of the next day, remember, because we're doing end of day stuff here. So it's the default price of the next day after it's already crossed through. So bear that in mind. There are more complex things you can do in here with user-defined entry rules. We won't be doing that at the moment. That's a much more complex method of testing. This is the area where we'll concentrate some on is exiting. We all know about the entry and getting in, and one of the most difficult areas is exiting. In this case, we can, if we really wanted to do, just evaluate it for what I call the old bog standard 21 days, which is pretty much a trading month. It just exit after 21 days. It's kind of what I call a neutral strategy test. Doesn't do any money management decision, doesn't do any expert or technical indicator exiting decisions. So it doesn't have, it doesn't give you a lot of information. It does show you all of the entry points. And so it's kind of useful for that if you want to see the types of stocks or how often it goes into a position. What we'll be doing is we're using the trade it area. And in the traded area, you have both the ability to trail stop, so 80% of the profit once it's gained momentum and it starts to fall back, it can save whatever percentage level you want to on the trailing stop. Initial protection of your initial investment. This usually defaults to 80 in here, but we've set it to 90 in this case. I've switched on the trailing stop because I like trailing stops. And I've also switched on here a slightly different stop. It has to get above 5% profit and then fall back before it takes 80% of that. So there are various ways of trying to protect both my initial investment and my profit once I've made money. So that's a really very basic exiting strategy. We're going to modify this area here with the exiting on a roll as well. So one of the things we'll do once we do that, you can include open positions that are still being held. So that gives you an idea of exactly how much is making money right now. You may be still in the position. So once I click OK, nothing happens. You can just do test and then run and watch what happens down at the bottom of the screen here. This comes back up. You can make a modification, then click OK. It's really, really quick these days. And then you get the results from that simple trading strategy on just the Bollinger Bands cutting from below to above that lower band. So remember, 2 years worth of trading. So we're talking about around about 240 trading at 480 so trading days. We're only looking at 30 stocks. So it's got 230 trades. So once every other day, pretty much, it was firing. Quite a lot of winners versus losers. Remember, we had protection in there on our capital. We had protection and trading stop, and the protecting profit above a certain percentage gain was also in there. So various money management techniques were included in this very simple test strategy. Things we look for in here are, number one, what is my average drawdown? I mean, how much pain did I get for winners and losers? And it's pretty good in here. I mean, this is 2.3%. 10.8% on the losers, that's the average. The maximum profit loss is indicated here, so the worst position we had to lose on was 15.45%. That's not too bad, not too bad at all. The other thing, reward risk is greater. That's pretty good, 2.04. And did it outperform the market doing, the average SPX holding through that same period, holding in positions at the same time? Yes, it did. So it definitely has some merit to it based upon that particular parameters. And remember, we're only doing 30 stocks in here. So if we like that, we're expanded is the next thing. So we'll go to properties here, and I'm going to boost it up to the SP500. Let's see how this works on a bigger database. So again, I've changed the properties. Remember the rule and that tab where we had the report from running each day, and this particular back test is all assigned to that same thing. So I haven't changed the strategy for entry. I've just changed the number of stocks. I haven't changed the actual profit and money protection, the portfolio management, money management areas at all. I'm just changing one parameter. So when I click OK, it's going to run this now. Again, same strategy, but on a bigger database to see how this looks on a larger database. So again, it looks pretty good. A lot more trades. So remember, this, you have to bear this in mind. How many trades are there on any given day just using the Bollinger Band crossover? In this case, again, the winners outdoing the losers considerably. That's impressive. Remember, we got the protection in place to stop it when it goes against us and goes to the downside. That's pretty good too. And we've been fairly, I would say, conservative on taking profits. Once he gets up there a bit, we want to get out pretty quickly. So that's a lot of trades over the period of time. It's doable. There's no doubt. It's definitely doable. 4,000 trades. Over that period of time, you're probably talking about 9 or 10 trades, 8 or 9 trades a day. So you could look to reduce the number of trades by looking at a smaller subset of stocks. Remember, this is 500 stocks in here. The key thing is we're still beating the market. And, the ROI is definitely still beating the market for the period we're testing, remember. This is 2020 through 2022. What I've started to do when I'm doing tests like this is I do tend to make notes. Making notes is a biggie for me about what I changed. So in a case like this, what I changed in here, when I go back into edit, I put a trailing stop at 80, and I put the profit protect was 80, and the protect on my initial capital is 90. So that information that's also contained here, I could either take a screenshot of this, or you could do what I've done in the past, which is the exit summary to me is important. So I can actually take this, see if this copying still works. Give me a second here. No, it's not always working to do it that way. So what I've done is I've flipped back into my rule view here, and I'm going to put a comment is that I protected, tested, and today's date is 7/20/22, profit protect 80 above 5%. Percent would be useful, thank you. And the last one was the give me a look. Let's go back into this real quickly. And the last bit was, yes, 90% on capital, 80% trailing. And yes, 80% trailing, profit percent about 80% trailing. And last one is 90% initial. Beats the market. I mean, whatever notes you want to make is the important thing is that you know what you're doing, because when you do that, I click on file and save, by the way, putting the exclamation mark in front makes that a comment. I can write whatever I like in there. When I go back into here, I've looked at that and it's like, I still like that. Maybe this is not a bad strategy. And so I could either add in some tighter constrictions and work on the exiting strategy. Might be a good place to start from. And one of the things that's worth looking at, and I always do this as well, go to the positions themselves and take a look in here, because remember, we're doing this on the S&P 500. This is a very big list with a lot of trades. So one of the things you'll notice is when I click by, if I click by entry date here, it'll sort by entry date. I need to know, is this a really viable on this size of database? So here's the clue that this is real tough to manage. It's a very simple strategy, of course. This 7/18/22 entry date all the way to here, all of these stocks fired and are held for 2 days based upon this Bollinger Band entry. So it's a single indicator entry with no other indicators to confirm it. So that's pretty hard to manage when you're going to get days, when you get clusters like that. You're either going to dilute your capital too much by doing so many positions, and it's much harder to manage. So that's one thing to bear in mind. Again, reducing the size of the database might be worthwhile examining as well. Maximum drawdown is a good one. How much pain is there in here? Well, there's a couple here. Look at these, were pretty bad, but that's not too bad with considering 4,000 trades. There's like 5 or 6 here, maybe 7 or 8 that feel pretty painful. But once you get down to here, this sort of drawdown is not too bad. Again, you might say, well, I thought I protected myself against that by having an 80% capital protection. The problem is this is end of day, 80%, it says, oh, wow, you've hit the, it's gone down immediately. It's hit the stop. But then you still got to get out of the open next morning. And guess what? It gaps down. That's when you get these sort of higher drawdowns. You can't really avoid that in any system, as we know. It's very difficult to do so. But that's pretty good looking right there. Maximum profit, as long as we don't have some sort of what I call a pie, and not pie in the sky, it's like a to the moon and back type. If you got like 100 positions that were traded and 3 of them had 5,000% gains, that skews your numbers totally. So this looks pretty good. There's a few up there that did very, very well. The XCM, obviously, no one's going to complain about 339% profit. But notice it was held for 41 days. That's a pretty long time to be held. Some of the longer ones as well. So none of those rules that we had in there as far as money management exit made an exit from this strategy for us. So look out for that. Look out for skews in there. So let's go back in here to the actual rule itself. We could put in a exiting strategy in here. And this could be something that is based upon another indicator. And I could use any like a MACD, for example, might cross down. So we could add that as an exiting strategy. Or we could, again, do some more testing as far as the different parameters using different databases. But the rule works pretty good as it is. And we can combine that with another rule. We don't have a huge amount of time today. But what I want to do is we'll leave that as it is. You have this in the system. Simply look at it and you can evaluate its effectiveness on the different lists that are available for you. Works pretty good in most circumstances with money management rules in place. And as we saw, there's lots more winners than losers, so we're in a good place to start with. So remember, this was on the S&P 500, and we started with the Dow Jones somewhere in between, maybe an S&P 100. That sort of size database would work well with that Bollinger Band. We could also, if we had time, work on the other end, right? There is a rule in there, price crosses from above to below the upper Bollinger Band, but we won't be going into that today. We need like a whole day to do this. I have another rule in here. We talked about one indicator. There are so many of these based upon just one indicator in the system that you can spend a lot of time testing. There's the price crosses from above to below the upper Bollinger Band. It's the sell signal. And in Bollinger Bands, there's also combined together, you could combine it with a squeeze and low volatility, which is a classic Bollinger Band event that happens. When that happens, prices usually take off in one direction or another. It doesn't always give us the direction. So that one's a little harder to test because we're trying to go long or short, and we're not doing both together. So if you want to test the other strategies that are in there in this strategy using one indicator, there are masses of them in here. Pretty much every indicator that's in the system does have more than one strategy in there, because a lot of these indicators, like MACD, can be used for divergence, for crossover, and you could be using continuation patterns and all sorts of things. So what we're going to do next is look at another indicator. This is a combo one, which ties in nicely with our expert rating we were doing earlier. And of course, save us time, I put this together earlier for us to look at. So this is a file that's in your system again. It's in the expert rating, EDS strategies, in your Wintest 32 folder again, expert system-based strategies, expert rating strategies. It's a long old journey down there. So this is up and increasing trend score. So this is already in the system here. If I clicked on it, I'll open it again. My copy has some extra stuff in here because I've been preparing this beforehand. First off, what are we looking at here? I decided to do this because we had that ER up that I was looking at earlier, and I wanted to combine it together with a bunch of other indicators. And those indicators are actually the trend score. Now, trend score itself is up here. I pulled this out of the help system for charts for you. It's a useful indication of overall technical strength, and it's designed to be a quantitative measure of the current trend. And so the trend itself is based upon these indicators are all used as a special expert system that's independent of the regular expert system. So this one is in there, is called TS. What we're looking for is something called DTS, Delta Trend Score. And this is because this does trend score as an evaluation of all the stocks that you have in your database. The Delta Trend Score tells me those that are either in a trend or are accelerating up the list as far as trend is concerned. So what I'm looking for is stocks that may not be, or may only just started in a trend, but are accelerating and have all of these indicators looking quite strong. So with that in mind, I'm testing a combination here. What I'm testing is if an upgrading and change in the Delta Trend Score in the last 5 days has happened. There's been an expert rating, which can be early, and then suddenly we get an acceleration in those indicators indicated by the delta as in change and Delta Trend Score. So what I did here was the original rule in your system had 90 in here. I changed it to 95 and 95 here as well. All this is doing is just seeing if there's been a high expert rating 95 or greater in the last 5 days, and has the high value of the Delta Trend Score, has it been greater than or equal to 80 on any given day? Trend score doesn't really care. If I'm greater than 0, that's fine. That means it's in an uptrend. If it was negative, then that's to be contrary to what we're looking for an up move, i.e. to go long. So this particular rule, again, the coding's not important, it's in there. When we put ourselves in to do a report in here, the confirmed up is what we're looking for. So the expert system in the last 5 days has said, yeah, it's going to fire. There's going to be an expert rating to the last, there's an expert rating today, and it's greater than 95, but has there been a Delta Trend Score changed in the last 5 days that is greater than 80? So that means the acceleration, the trend is either flat or just beginning to go up and is suddenly accelerating. So it gives me a couple of areas to look at. Earlier I changed, and to say here, I put notes in here. Anything I change, I put a note in here so I know where I am and when I did it. It's a great thing to do. 2 things I did in here was this one we're going to look at first, is that's the ER. We actually ran the rule so we can see what it does. And then we chose a rule to exit on. So let's evaluate this. This is an expert rating and a trend. So we're testing a bunch of indicators basically together. Notice in here, I ran this on 7.7. First place we go, file properties. What am I running it on? The Dow 30. What I have here is a list of all the stocks with the delta score and the ER up. So I can see where there are expert ratings and what day things fired on. So this is useful to have these columns in here. But in this case, again, we're going to go back when we do report and we do new back test. It will create a new back test for us, which I have already done for you because of our time constraints. And ER up and increasing trend score. Remember, this is canned in the system. I made some minor modifications. By the way, save it, file and save before you do anything else. And then I'll come in here and I've run a test. So I've jumped ahead of myself a little bit here because I already have that capital protection, only set at 80%. That's the default. Profit protect 80% above 5%, and I got an 80% trailing stop. So very similar, except the capital protection is set at default. This is a default settings. In this instance, I set a para SAR, which is a very very useful indicator as an exiting strategy. So let's evaluate what it is I'm doing here before we run a couple of tests to see how well this works. So we go test and edit like we did before. Remember, we're just doing the Dow 30 to start our day off. And the entry point, again, we're going long. Remember, this is ER up and it's got trend in the last 5 days has been accelerating. So that delta trend has been doing pretty well. There's a buy long is what we're doing. The range, again, sticking the 24 months back. We can go longer if we want to evaluate more. And to include a period where there's bear and bullish, and obviously right now this is perfect timing for this. We're trying to go long, right, during what is really a year and a half. So if you're going back 2 years from now, so last 2 years from now, it really encompasses a pretty dramatic market changes. So good period to test in. Pricing, as I say, next open is what we're going to do when the rule fires. It goes to buy the stock. Whatever number of stocks it actually saw past both the expert rating and the trend score delta rule, it's going to buy. It doesn't care how many of the stocks it fires, it just puts a buy in for all of them. And the exit, as I said, defaults, these are all defaults, but what I have added in here is after one period, exit on a para SAR sell. So where did this sell come from? Well, I coded it in here myself. So I can actually do this. Let me get back over here, back into the rule view. I coded an exit strategy. I could either code it myself or I could open another EDS file and copy and paste in an exit strategy. So in this case, this is what I did. I like Power SAR. Sometimes it's like a tongue twister, but Power SAR is a method of price action. The Power SAR indicator goes up and follows along with the price as it goes up. Once the trend changes down, it cuts back and ends up going down below the price action itself. So real briefly here, I'll show this on the price chart. You have this in your system. It's normal. Give me a second here. Need that up here. And over here, we have in your control panel, you have the ability to add Power SAR onto the price chart itself. And you can pretty much see how we won't get into the mechanics of it. If you're in a long position and it stays down below there, as soon as the Power SAR is above the price action, that's your exit point. Simple as that. Pretty good. Obviously in sideways moves, when we get sideways whipsaws, trading ranges, like a lot of indications, it's really hard to trade that. So again, that's a Power SAR, which we're using to exit in this particular instance. Simple code here. I wrote this Power SAR above the close today. If the Power SAR is less than the close, not that back to front. Power SAR below yesterday if the value of the Power SAR yesterday is less than the value of the close. So basically what we're doing here, let me see here. So the close today is greater than the Power SAR, which means it's now gone below the close. Yesterday, it was the value of the PASR 1 day ago. This should be the other way around, I think. Value of Power SAR yesterday. No, that's right, less than the close. And give me a second here because I coded this. And so the exit here, so exit is here when power SAR is above the closing price today, and power SAR is okay when it's below it on the previous day. So in this case, power SAR above close today, if the power SAR is greater than the close, this is why we check these things, and the power SAR below close yesterday, when the power SAR was less than the close yesterday, which is perfect for our rule here. So then we combine them all together, call it a new rule, power SAR sell, if this occurs and then this occurs. Very straightforward, always save, file save. And so I go back into this tab because that's the tab for the confirmed up for the rule, the expert rating and the trend. I go back to my back test here. I go to test, and we already know that we have power SAR in here as an exiting strategy right here. We'll include open positions. After 1 day, exit on that. Click OK, and it runs through it. So now we can see, how is this effective? Are we beating the market based upon just the Dow 30 stocks? Now, interestingly, very even winners versus losers here, 77 versus 71. Remember, this is a pretty volatile market period. We had during this time, we bounced out of that March 2020 low, and then we went a bit bullish somewhat during the latter stages of the pandemic. And then, of course, beginning late last year, things started to roll over, and now we're down into this bear zone. So you're seeing that, again, we're doing long here. We're going long. We could also look at the reverse of this if you wanted to add in other elements. But our key thing here is, do we beat the market? Yes, we do. If the market buys at the same time, we can beat the market. Return on investment is 20%. Need a bigger database to get a good figure on that versus the annual SPX buy and hold. 77 winners, 71 losers. So we do pretty good because the winners outperform the losers quite nicely. So it's a pretty good system. But again, we need to put it on a bigger database. It's the next thing. So in this case, we'll try it on the SP 500. Click OK, test and run. And we'll leave this exactly as it is, exactly the same parameters as we had, just to see if it scales up. And remember, I'm going to go and make notes about what I did in here and what I tested every time you test indicators like this. So once we scaled up, what do you notice here? It's not as good. It's just not as good. A lot more trades to just barely creep out and eke out of beating the market. The reward risk ratio is not so good. So what do? I go back in here into my regular view, and I go change the default ER to this, put on 718, better results by power SAR on 719, scaled to SP 500, not so good, barely beat market. So keeping track of what you're doing here is really important, so you don't come back or you don't lose track of what you're doing. So that's taking that simple rule. Remember, file and save it before we do anything else. I'll go back into my back test over here. I'll test it under default conditions as well. We'll get rid of the power SAR. So we're just using the money management techniques again, clicking OK, and test and run, and let's see what happens in this instance. And again, we're on the S&P 500. Good thing about just using money management techniques, we'll see if the power SAR was responsible for any of our problems. Now, this is real interesting again, because the number of trades is 1,712. So there are less trades in this instance. Again, remember, look at the properties in here. What are we trading on? SP 500. We have 1,712 trades over what period of time? 2 years. So it's 2 years. We're trading this number of trades. Winners outdid losers substantially. We actually outdid the market pretty well if you look at it just on the trades themselves. If you're doing an ARI, and this is annualized, it's not so good. So there are other factors in here that you could have gone out and just bought the SPX and hold on to it. So it'd be worth looking at the positions again. We go look in here and see if there's some clustering going on. Sort by entry date. Yeah, it kind of looks a little bit like it. Not too bad there. Look at these dates here. They're not unbearably bad. Literally, you scroll down here looking for something like occasionally you see, and just bear with me a second while I look through this, because you probably can't see it changing quite like I do. So here's a great example, 318 entry here. So we're talking about maybe 25 to 30 trades on one day. Too many, right? Too many to handle there. So again, it's the system itself is relatively effective, but we're getting too many trades in there. So this can be either a smaller database that's run on when we ran on the Dell 30, or we can look into adding more stringent rules in here and trying to eliminate some of the losers. Because when we look at the drawdown in here, and I did look at this before, let's see. Let's get back at the top here. And there's the drawdown itself. Not too bad on the drawdown overall. There's a large number of stocks that are more than 20% drawdown. That's not so bad. But the profit, if we sort by profit on the loss side, let's see. Yeah, there's a fair few that have lost 20 or more percent as far as the profit is concerned. So that's something we'd have to look at. Again, what you would normally do is you'd look at some of these stocks to see what happened, especially the top losers as far as profit is concerned, and the drawdown ones, see what it is that happened. What was the exit there? What went wrong? So that's going back into this particular rule, which, as I said, was the, let's go back in here. We're looking at an expert rating and a delta trend score. Literally, that's all we're looking at in there. We could combine in here to have other rules that will give us a confirmation. We could even throw that Bollinger rule in there to see if all three events happen together, whether that would make a difference. And again, all you'd be doing to make that happen is to go ahead and go down and get this rule. This is the rule that we are using for the Bollinger Bands. Literally just take the whole rule and copy it, and then go back into here on a new line down here. Doesn't particularly matter where. We then paste in that rule. So now I've got that expert rating high. I've got a trend score. That basket of indicators is like accelerating. And I've also want to see if there's a case where prices cross from below to above the upper Bollinger Band. So a third event that we could check to see has happened. So in order to be able to use all of those together as three events, so this buy, when if either of those above rules on the delta or the ER, we now have three. So I'm going to have to tell it, I have to say to it, this is what I want to do. So I'll call it buy on all three. So this is just a name I make up, which will stick in the system wherever I go with it. If, and what is it I want? Well, remember that lower Bollinger Band cross up? We want that to happen. And we'll pop him in there. And we also want the two rules up here, which was a confirmed up, because that combined these two rules together. So we'll take this guy over here and pop him down there. Simple language, really. Put a period at the end. When you click file and save, it'll tell you if it's an error. Well, there's no errors. That's good. So what have I just done is made another rule in here. If I have a rule in the system, I can create a report tab for it. So I go to report, and I can add a insert, and see there's all the rules that are in here. What are we interested in? Buy on all three. And so there's buy on all three. We click OK. And so now you have a tab for buy on all three in here. So I wonder what that would look like if we ran that on, that's the SP500, always checking, making sure we know what we're testing on. So I'm going to run it for 7.7. So it's going to look for high ER, look for that delta trend score thing, and look for that Bollinger Band thing. Let's see what happens. Yeah, nothing. No stocks at all reach that criteria. So that's a combination event. I bet if I did a back test on that, we wouldn't get a lot of trades. And I'm going to do that just to finish this session off because we are pretty much run over time here. So if I do a new back test, and so what I'm going to do is buying on all three, buying long, 24 months back, sticking with the same thing here, no exit rules, finish, and I'm just going to run it to see if this actually has any stocks in the S&P 500 have those sorts of events happening. It's just interesting, and there's a few trades. Look at that. Wow. I wonder how effective that is. 6 winners, 3 losers. Yeah, it doesn't work very well, does it? Doesn't work very well at all. So, but it's a good illustration, not something we're ever going to be trading. So I'm sorry I've overrun here. There's a lot of information in here, and I really appreciate your time. I'm going to get everybody, we had about 50, 60 registered today, and we'll get the recording out to you and to everybody who registered. If you've got any quick questions, pop them into the chat area there. If not, we're going to sign off, and we'll do another session probably in a couple of weeks, I think. I appreciate your time again, and I hope I wasn't too confusing or too overwhelming. Again, any of these I could apply, by the way, that rule that we were looking at, say the Bollinger Band one, we could apply that to a color study as well in here. So again, I just open up the rule that I created, which in this case was, oh, actually it's one of the existing rules, isn't it? I can actually go into the custom charts indicators. And AIQ indicator, multiple indicators. I think this one's under. There it is, AIQ ER up and increase in trend score. And I can create a color study for that too. And again, it'd be on the price plot, price bar. And the one is we don't want to buy on all three. That didn't work, did it at all. But there's a confirmed up was the one we were using. And get next. Change the color on this one so it doesn't clash with all the other colors. So with white, click OK, next, and then finish and click OK. And anytime, like right here, there's a firing on that Bollinger Band. Bollinger Band upper, Bollinger Band lower. And it's fired. Remember, it looks back 5 days for that to a trend score to have fired. So that was the crossover right there.